Israel and Hezbollah sliding towards a full-scale war, pretty serious escalation at the weekend. What are the scenarios you see for the oil market now, especially if Iran were to be involved? Why isn't oil higher right now, given what we've seen unfold over the last 48 hours?
Generally, the oil market remains complacent out of the fact that so far oil supply has not been disrupted if we exclude Libya. Oil keeps flowing. There are just different journeys via South Africa, and it takes longer times, but the oil production has not been disrupted. The biggest risk is that, as you mentioned, then Iran gets involved into the conflict, and that suddenly at some point Iranian supply gets disrupted. That's at the moment not the case, and I guess there are forces generally on the consumer side, including China, not having any interest in getting oil supply being disrupted. So generally, that's a bit the reason why the market is complacent.
So let's unpack the key risk as you describe it. If Israel were to target Iranian oil infrastructure as part of this military campaign, this military strategy against Hezbollah, what would that mean for prices?
At the moment, Iran is exporting probably around 1.5 million barrels per day of production. Spare capacity is probably around 5+ million barrels per day. So essentially, there could be countries being able to compensate for disruption, but the market would become more tighter, and therefore we should see a significant price increase as a result of this disruption taking place. But again, probably it's also not in the interest of Israel to attack Iranian production, but because that's the way that Iran generates revenue, and with that there is probably a lot of pressure to not go against Iranian oil at the moment.
Okay, so we're looking to see what happens next. Let's talk about the policy response as well. How might this ongoing conflict, let's not forget the situation in the Middle East has been very volatile for a number of months now, but how might this conflict influence OPEC's production decisions, especially considering the recent cuts that we've just seen the group make?
At the end of the day, the decision of OPEC is based on market balances. Is the market oversupplied or undersupplied? At the moment, I still believe the oil market is undersupplied, but sentiment in the market is extremely negative. There is a lot of concern that oil demand growth is slowing down. There is recession fears. Definitely of help is the rate cuts of the Fed last week. Potentially we get a rate cut also from China this week. So these are factors helping sentiment in the market, weakening the dollar, and that tends to be positive on generally oil prices as well. But the bigger impact comes with some delay. The other important factor is we should get another hurricane in the Gulf of Mexico impacting production. So that should also tighten a bit the market. And the last element influencing OPEC policy is generally the Libyan disruption. No one knows how long that will stay in place. And essentially, the longer it stays in place, the longer the market stays undersupplied, and that should still push prices higher. But at the moment, the OPEC plus country probably want to see more clarity on the demand outlook next year, also the indication on non-OPEC plus countries' production profile next year before unwinding the cuts.